Hey everyone, how's it going? My name is Richard and welcome back to the channel. So today in this video, we're going to be going over a super useful and effective tactic slash setup called the oops reversal. And I didn't coin this myself. It was developed by a guy named Larry Williams, I believe, and I learned about it last year from the Ticker Monkey chat room. Now, what exactly is an oops reversal? Well, simply put, it is when, and let me hide these drawings for just a second, a oops reversal occurs when we have a gap down below the prior day's low, and then we have a move and push through that low, and that is the entry point right there. Now, it's very simple, but also very effective. And in this video, I'm going to also be talking about the kind of psychology that creates this setup. And if you do enjoy this video, please go ahead and leave a like down below and subscribe to the channel for more videos just like this one. I've got a great video as well on the upside reversal setup, which is very similar and also very effective, but go ahead and check that out. It should be linked below in the description as well as popping up right now. So watch that after this one. But getting into it, an oops reversal is super effective. And let's kind of walk through what actually creates this setup and why does it work so well. So first of all, on this day, we've got some selling pressure. The close isn't great, and sentiment overall isn't great with the market as well. If we go over to the QQQ, we have a pullback off the highs on pretty high volume, but you might notice that Roku is pulling back on below average volume. So there's not a lot of distribution signs within the context of this particular stock. However, we do have a gap down in the overall indexes and many stocks as well, Roku included, and we do end up gapping down on the stock below the low. So there is the potential for an oops reversal. Now, if you think about it, a lot of people probably had their stops at this low and this low as well, and those were all triggered right at the open. But once those people who were stopped out saw the stock rallying strongly, they realized that they made a mistake, and that's why it's called an oops reversal. It is a mistake, and they decide to buy back the stock, and that's what really creates this momentum back through the low here, and this often leads to a nice couple-day rally, and within the context of an overall strong chart pattern, is usually an extremely good entry point with very low risk. You can set your stop right at the low of the day. Now, what I like to do personally is go over to a 5-minute chart and take a look and see if there's an opening range breakout on that particular day that triggers right near that prior day's low. So let's go over to an intraday setup, go back to that particular day, and let's go ahead and actually let's not show those drawings just yet. So first of all, this is the gap down right here. We've got some capitulation on this day. We've got an inside bar, and then we have a 2-2 reversal and an opening range breakout. And an opening range breakout is a different topic, which I'll cover in a future video. But basically, we've got a range defined here with this bar and this bar as well. And then very early on in the day, we break through that range on decent volume. So overall, we've got some capitulation, an inside bar, and then some upward momentum. And now we do come back and retest this high right here. And we've got a nice upside reversal intraday. And then we have some support right near this open as well, which often is the case on days like this. But nevertheless, this works really great. And if you did buy this breakout and set your stop at the low of the day, you were completely fine. Even if you set your stop at the low of this bar, which is pretty common, you're still not stopped out and you're willing to sit through all of this and ride out to a nice gain right on that first day. And at that point, you've got a nice cushion, and you can either decide to hold the stock for a longer term, or if you're a short-term day trader, you can take your profits and go. But nevertheless, we've got an opening range breakout, which also triggers the oops reversal right here. Then it fails initially. Then we get a retest. And you can see we also have some action, some interesting action around this level, this low of the day, transitions from resistance here and here to then support on this intraday pullback. Now, you don't want to really analyze intraday charts too much because, especially if you're a swing position trader, your focus really should be on the daily chart. And that's really why I want to emphasize in this video that I like to use this tactic within the context of a strong fundamental stock with great earnings, sales margins, like a Roku, a potential true market leader. And ideally, I want to use this within the context of a strong market. And that wasn't necessarily the case if we go over to the QQQ. we had potentially been entering a little bit of a correction here. But along with Roku, the entire market rallied on this day. So you did kind of have the support and momentum of the market behind this move as well. But I just want to re-emphasize this. I don't just buy any old oops reversal. I'm really focused on high quality stocks within the context of a strong chart pattern as well, because within this base, we've got a lot of signs of accumulation, great volume coming in. And once again, this pullback is on very low volume. And you can see this oops reversal is extremely effective. This is pretty much the low, the swing low of that week. And from then on, we've got a nice breakout and fall through. You can add on this oops reversal, add on this breakout through this level, even this level, although it's a little short-term extended on that day. But setting yourself up nicely with a core position or even just a half position on this day keeps your cost basis low and also really minimizes your risk. So going back to the intraday chart for just a second, let's take a look at what the risk would have been on a day like this. So if you bought here with a little bit of slippage, your risk was about 1.5%. So that's pretty darn good, especially if you're a position trader. And basically what this setup is allowing you to do is get in early within the context of this handle and potentially have a at least 20% move from this cup and handle breakout. So you're risking 1.5%, potentially get 20%. That's pretty darn good. And if you're really a position trader and almost an investor, a can slim investor, and you could potentially get an uptrend like this where it's going up 100, 200%, that is pretty darn good risk to reward ratio. So obviously these are all hypotheticals, but I think the oops reversal is a great tactic to know to basically enter right on the expectation breaker day. Because if you think about it, that's really what the setup is. We've got an expectation based off the gap down that will continue to move lower, maybe undercut the 50-day moving average. But instead what happens, we have a very strong rally through the prior low, and that starts a nice move up towards the top of the handle. And if you're a swing position trader and you can get in on this day, that gives you a lot of options to manage the position and potentially ride it for a longer move. So that is Roku. And once again, I do want to reemphasize that I always like to use this within the context of an overall strong chart pattern. So here with Roku, there's a lot of signs of accumulation after the capitulation day at the bottom of this base, nice move up. And especially right here, we've got walls of blue here, huge volume to the upside and a bunch of days up in a row. And if we turn on the drawings here, there's a couple of reasons why an entry right in this area could be a potential good setup. So first of all, we've got a low relative volume pullback to the 21 EMA area. That's often a setup that I like to use. We've also got an undercut of the prior low within the handle, shaking everybody out right here. And we've got a strong rally on that oops reversal day right through that low. And most importantly, we've got a low relative volume pullback to this prior intra-base setup, the pivot right here set on the 14th of April. So there's a couple different things lining up here, and that's really the ideal situation. I always like to see a bunch of potential setups lining up on one single day, and that just adds the probability of something like this working. So once you've got the overall strong chart pattern, that's when you use a tactic like the oops reversal. So that is an example with Roku. And last week we had a bunch of other strong examples. For instance, with Domo, we've got a high handle forming right above the prior pivot. You've got reversal signs off this pivot a few times before. And then once we've got that overall strong chart pattern, then we look for tactics to get into a stock like the oops reversal. So here on Monday, we had a gap down, move through the prior day's low, and that really starts a nice run towards all-time highs and gets you in pretty close. And looking at the risk, it would have been about 1.5, less than 2%. So a very good risk reward entry in a high potential stock like Domo right near all-time highs and showing a lot of relative strength versus the market late last week. So once again, this is getting you in pretty early and usually near the bottom of the handle, if not the bottom of the handle. And on this day, you really want to see a strong close. And ideally, you're having a good profit cushion, 2, 3, 5% immediately on that first day. So you can sit through any potential pullback inside day the next day, and then hopefully start a position and work from there. So here we almost had a bullish outside day. Actually, we did have a bullish outside day, although we didn't close above this high, but we did take out this bar's range. So often this could turn into a 3 bar, which takes out both the high and low of the prior day's range. Going through some more charts, we've got D-Dog here, which had a very similar bar, oops reversal through this low. I also like that this bar had pretty low volume and tight action, as well as a pretty good closing range. And we take out this range and then move back through it here. Let's take a look at what the risk would have been, under 2%. That's pretty darn good. And this week, a lot of these type of setups acted really, really well. Obviously, it doesn't always work out perfectly, but the best part about this setup is you have very low risk, usually about 1.5%, 2%. And you know very quickly on that day whether it's going to work or not, because if this closed around mid-range below this low, you don't want to hold that overnight. You have no cushion to do so, and it wasn't really a strong pattern, especially if it moved up and then fell all the way back here. That really indicates that the sellers are in control and it isn't a strong move up because of forced out holders that bought back the stock or institutional accumulation supporting it on that gap down. So that is D-Dog. Let's go through a few more examples. We've got Dash here, really nice bullish outside day, oops reversal through this bar. And this was another one where we had an inside day on Friday and we took out that range and then recovered it strongly here. If we look at this and introduce a little bit of slippage, this risk would have been about 1.5%, pretty darn good. And Dash was one of the best stocks and best looking setups going into the week. And from this point, if you entered pretty close to that pivot, you'd be up 14% to end the week, a pretty good return in a very short amount of time. And you can see it's very low risk compared to buying today, where it does technically take out this pivot. But even if your stop is here at the low of the day, your risk is about 3%. So risk is much higher at this point. And you can always add on this day after setting up a core position here through the oops reversal, or even adding here through the bullish outside day breakout. So that is an example with Dash. Let's take a look at a few more. I think we've got CrowdStrike with one as well. And on this one, I might not have taken it because if you take a look at the oops reversal, this risk to the low of the day is 3.5%. So it's a little bit high there. I usually like looking for ones where the risk is 1.5%, 2%. And this one, if we go intraday, it might have been one where it triggered an oops reversal, then reversed all the way down and then recovered. That could be true as well. Sometimes that happens. You just have to deal with it and make sure your stops are in place and manage risk accordingly. And one more example here, we've got Net, Cloudflare, a very strong move this week. And once again, we have an inside day on Friday. We take out that range. And this is the pivot right here with the prior day's low. This risk is about 1.5%, 2%, pretty darn good. Once again, a very strong bullish outside day. That's kind of the ideal situation with an oops reversal. It goes all the way and makes it a 3-bar through the prior day's high as well. Then we have beautiful fall through. And I also like how this day was a pocket pivot at the very end. So this volume was higher than any down volume within the past 10 days. So this stock was another really good example. I also like how it's within the context of a very strong stock. That decline on below average volume is right near all-time highs and was holding up better than the market to end last week. So again, I really want to emphasize that I like to use this within the context of a very strong chart pattern and when the market is doing quite well. So on any given day, how do you find stocks that have oops reversals? How do you find potential setups? Well, one way I do it is using my watch list in TC2000. I have a column here called oops reversal, which I can click and it will basically scan for oops reversals on any given day. You see that today, GNRC actually had a pretty good entry point right here and actually had one on Monday as well. Although you do have a pretty far drop to the low of the day as well as the 21 EMA. So once again, a little bit of confluence here as well. That's always good. But getting back to the point, how do you find these on an intraday basis? Well, in TC2000, let me right click and edit this. This is the very simple code for an oops reversal. The open is less than the prior day's low and the current close is greater than the prior day's low. So this can translate into basically any programming language in any charting platform, TradingView, Thinkorswim, all of that. And let me know down below in the comments if you'd like to see the same setup on a TradingView chart. I could definitely put that out for you guys. But nevertheless, you can also scan for this in TC2000 by using that PCF code. And this program makes it super, super easy. And if you do want to try out TC2000, I'll have a link down below in the description to check it out. and you can basically set up my exact chart layout, exactly what I use with all these indicators as well. But that pretty much wraps up the oops reversal. Once again, I want to reemphasize, I like using this within the context of a strong chart with a great fundamental story, great earnings, sales, margins, and hopefully the market is doing well, at least on that day as well. So I hope you guys enjoyed this video. If you did, go ahead and leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.